All right, candle range theory trader back with you for another video showing you how to trade the candle range theory at key price levels. So let's not waste time and get right into it. What this video is going to cover is what indicators you will need. Okay, what are the price levels you should be looking for to trade the candle range theory? A decision flow / checklist, whatever you prefer for trading, so you know what you should be trading and when to stay out of the market, and some wheel chart examples. So the indicators that you're going to need are both for free and they're in TradingView. The first one being called the mark levels, and the second one being called the candle ATR candle indicator. I'm going to show you how to put mark levels on, but if you do not know about the ATR candle range indicator, you need to pause this video or you can watch to the end either way. But go to the description. I will link in what is the candle range indicator in the description box. And you'll need to look at that video so you'll know how to put that on your chart as well. Okay, those are the two indicators that we're going to need. In terms of the price levels, these are the only levels at which we should be trading. We're going to be looking for the weekly open price, and that's going to be shown to us automatically with the mark levels indicator. You're also going to be looking for daily highs and lows or weekly highs and lows. That is it. If the price is not at one of these three levels, we're not trading it. So that eliminates the guesswork. So here's the decision flow that we're going to be looking for when we go over our charts and we're looking for trades. So step number one, you come to the chart, doesn't matter what time of day it is. Is there any ATR candle, which is indicated by a blue or yellow candle on the chart? And I'll show you this in just a moment, so please be patient, okay? But if there is an ATR candle, you can continue. If no, there is no trade. You are not trading if there is no ATR candle. Next is the ATR candle at a key level. Current high or low of the week or day, current high or low of the current high or low of the week, or current high low of the day, and lastly, the weekly open price. And again, this will be shown to you using that indicator called mark levels. So if yes, you can continue. If no, there is no trade. Lastly, is there a money candle? If yes, we take the trade or we wait for a retracement in the money candle range to take it. And if no, there is no trade. You must wait for a money candle to appear. Okay, so if you have a range but there's no money candle, and I'll show you that, you're going to wait for that candle to appear, and then you are safe to trade once that money candle has closed. So to simplify this, you're looking at yellow candles at the highs, blue candles at the lows. That's it. Okay, so let's head over to TradingView and set up our chart. So I'm here in TradingView now, and you'll see this lovely chart here. I already have the ATR candle range indicator set up, but what you're going to need is the mark levels indicator. So what you'll do is you'll come to indicators, and you'll type in mark levels. All right, you save it to your favorites by Mark Tools. I have it already, so you'll put that here. And it will populate. Now, it's going to have a lot of lines in there gray. Me personally, I like to make the lines dark, but I'll show you the settings that you'll need. First off, I get rid of the equal highs, equal lows. I don't need that. I scroll down to the month. I'm not concerned with any month price levels, so I just, uncheck all of that. For the week, okay, I'm going to do the current, and I'll check previous. I don't want that. I'll leave the swept there. And then for the day, and also open. So remember, we're looking for the weekly open price, okay, weekly open price. And then swept, you can leave checked, it doesn't matter. And then current, be sure that's checked. So you should have 4 boxes checked. The week, the weekly open, swept is fine, and current. Lastly, you should have the day. The daily open you can keep, it's not a big deal. Swept, that's fine. Previous, we're going to get rid of that. Current, we're going to keep that. All right. So lastly, what I like to do is make this a little darker. As you can see, if you can see, it's a little gray. So I like to make it black and just as dark as possible. Let me see if I can move this a little bit. There we go. So the opacity I move up to 100, and it's nice and dark. All right, so when you're done, this is what you should see. The HOW stands for high of week. HOD stands for high of day. DO stands for daily open. You don't really need that if you don't want it, but you can. But for this video, I'll go ahead and just take it off real quick. Okay, we'll take that off. All right, and then LOD stands for low of day. WO stands for weekly open, and then LOW is low of week. So let's cross-check this against our price levels. Here we go. Weekly open price. Do I have that? WO. Yes, I do. Weekly open and weekly open, daily open. There's my high of day, high of week, low of day, low of week. I'm good. I'm set. We're straight. All right. So now we keep going. So we set up our chart in TradingView. So now let's take a look at some real back testing. So this is the week of November 15th, 2024. Okay. November 15th, 2024. Sorry for my overseas folks. I'm in America, so we write day, month, year. But this is November 15th, 2024, if you want to look at this. Okay. So let's take a look. And I segregated this by ATR candles at the weekly open, and then the high of the day or week, and then low of the day or week. So, okay, so this is a week at a glance. So this is Monday through Friday, 4-hour chart. Again, this is 4-hour charts. All of these charts are 4 hours. All right. So this is first off where we see price an ATR candle at the weekly open price. Remember, we just saw WO. So here we go. Right here at 9 p.m. All right, Eastern Standard Time. There was a blue ATR candle. Remember, blue means long. All right, for the ATR chart. You can change these colors if you put your own ATR indicator on your chart. But for my channel and my chart is blue. When I see blue, I'm like, okay, what price level is it at? So we have our blue to the weekly open price. And then we must wait on our money candle because let's remember our decision flow. We got an ATR candle. Yes. Is it at a key level? Yes, it's at the weekly open. So then I wait for a money candle. So then I go back. The money candle did poke below the range and then close above it. Now the thing is though, that price kept coming back to this level. So you could have gotten in anywhere across all of these 4-hour charts. So this chart gave you, let's see, after the money candle, this wouldn't have been an ideal entry. You would have had to wait for a retrace. So we'll say about it right here. You got 4, 8, 12-hour frame here to get in. And then another 8 hours to possibly get in right here. This big old long wick here is nothing to be scared of because it did close inside the range. As long as the range is not broken, the low of this ATR candle or the low of the money candle is not breached by more than 25 pips, trade is good. And as you can see, it took off. I believe this was more than 80 pips once price did take off from this level on up to the top of the range. All right, so that's one. Next example to a weekly open. This one right here was a 1 a.m. blue candle. So remember, I'm looking long to the weekly open. There's our weekly open right here where my mouse is, WO. So we see a ATR candle, and then the next step is to see, okay, is it at a key price level? Because if it's not at a key price level, I'm not interested. Okay, so here the money candle came into play, and then boom, price took off. This was good for 50 pips once it broke out of the range a little bit. All right, so that's another long example there. Next up, high of the week or day so these are some shorts. So now we're looking for yellow candles. So here's the first one on pound Australian. All right, so here's our ATR candle at 9 p.m. right here. Okay, so this establishes the range. Where's our money candle though? The money candle came later because the next candle did not give us a poke above the range and close below it. Okay, that didn't happen till over here. This is the money candle where this red arrow is. Okay, where the red arrow is. I'm going to have all the money candles marked with arrows. So that's the money candle. Once the range is poked above and closed below, it came later and then price tanked the rest of the way. All right, so that was about good for 50 pips from the top of the range to the bottom. So you want to be in near, close to the top of the range as possible for shorts and for longs near the bottom of the range, money candle range, etc. So now for the low of the day or week, let's take a look. So we have pound Canadian here. We have a blue ATR candle, and then next the money candle comes right here, the very next candle. These are the best setups to see. If the money candle immediately follows the range candle, those are the highest probability. They can come later, but when it happens one after the other, you're really ideally looking for that 3-candle pattern. Got the range, the money candle, boom, expansion. All right, expansion to the upside. All right, so you could have got in as soon as the money candle closed. This was good for 85 pips in 4 hours. Bang, done deal, you're out. Okay, that's enough. If price breaks out of the range a little bit, that's cool, but I'm not expecting price to go all the way back up here. No. Okay, these trades aren't meant to be held for like 2, 3, 4 days. These is not swing. This is a day trader's method. Okay. So next example here, we have Euro Canadian. So we have the range candle here. Okay, at 1 a.m. Money candle came next. And then you could have entered as soon as the money candle closed because boom, sometimes price will not retrace back down. Sometimes it'll just go straight up. And that's what it did here. This was good for 79 pips. A key takeaway here as well. See here, see this money candle, and see how it says LOW right there. If this is a key point, remember this. Okay, this what I'm about to say is going to put some serious money in your pocket if you let it. If the money candle makes the low of the week or the high of the week, your chances of success are going to skyrocket. Okay, because I just showed you that right here. Money candle, low of the week after the range, boom. Right here, money candle, low of the week, boom. Up to the upside. 79 pips on this one, 85 pips on this one. All right. So when the money candle makes the low of the week, pay attention to that. Okay, pay attention to that. All right, so let's go to another one. This was at, and I included this one because it's kind of a weak trend, and then before it came down. But we have our ATR candle right here that did strike at for the 9 a.m. hour. Money candle came later. Okay, so it didn't come immediately, but the price did. There's actually kind of two of them. This price poked below and closed, and then this candle here poked below and closed above as well. So you can see you have two. You'll have that from time to time. It's an art. It's not a science. Okay, but this is the last candle here. Money candle happened here, low of the week. Okay, money candle did make the low of the week right there, and then price went up. But this was only good for about 30 pips. It didn't quite reach the top of the range before it came back down. So, you'll have that too. Just be aware. A lot of things can happen. Next long example where we have, this is euro pound. We have a money candle here at 1 a.m. While price did break out the range a little bit, it didn't do it too much. When I measured this was like only 1 or 2 pips. If price closes below the range by 1 or 2 pips, that's not a big deal. This range is still good to go up. So money candle made the low of the week here, had a couple of strikes, and then price took off. You could have entered right here after the money candle closed, and this was good for about 50 pips to the upside. It did break out of the candle range. So, I mean, hey, sometimes you'll see this, but sometimes you may get this. Both are possible, so control your risk. Now, in conclusion, okay, only taking candle ranges at key price levels, and I just told you what they were, will eliminate a lot of guesswork and a lot of random entries, okay? You must remember that most pairs on a weekly basis will not give you a good setup. That's why I monitor all of them, but I'm only trying to trade one a day, really, if it sets up. You will not capture every move. Okay, but the ATR indicator, the beauty of it is going to help you with quick scanning. If the first thing you're looking for are blue or yellow candles or whatever color you set up when you set up the ATR indicator. Okay, that's the first thing you're looking for is those range candles that have big average true range that have exceeded it. If you don't see that, you're not trading that pair for that time frame or for that day. Okay, so this is not time consuming. Out of the 27 pairs that I watch, only 7 of them gave me a setup for this week that I just went over. Okay, so we got to remember that it's kind of like poker. Most of the hands that you're going to be dealt, they're not going to be all that great. Okay, they're just not. That's just the way it's set up. So the next thing that we need to keep in mind is that if the money candle makes the higher low of the week, or sometimes the higher low of the day, but for the most part, like I said, the higher low of the week, look out because profit can be realized. Okay, but at the same time, don't be greedy. Okay, don't be greedy. Don't feel like, okay, well, now I see a money candle, so now I can go throw 1,000 lots on this trade because look at this trade right here. Okay, this is the cautionary trail. This trade only went up for about 30 pips, and then it came right back down. So the last thing I want you to do is throw 100 standards on something like this. You're up and you're celebrating thinking it's going to break out the range. And then by the end of the week, Friday, it's right back to where it started. And you're breaking even, or you may have even lost money depending on if you added to your position. So be wise, control your risk, and anything can happen. Lastly, be mindful of news releases. So ideally avoid news and just trade after it comes out. So you always want to check Forex Factory for things like that and make sure that you can avoid red flag news more than anything else. Orange and all that type of stuff. It's mainly red news that I try to stay away from. So I thank you so much for watching. Please subscribe to the channel if you have not. Leave a comment. And if you do subscribe, my word to you is that your trading will never be the same. So I appreciate you. Thank you for your time and attention. Have a great rest of your day.